Welcome back to the channel. You are watching the Stock Eye, a clear vision towards portfolio wealth. I am your host and CEO, Kenny. Welcome back to the channel and page. All rights are reserved. So with the portfolio update, it's been a minute. I do want to give a shout out to Bloomberg's Taylor Riggs and CNBC's Sarah Eisen. No doubt. Let's move forward. It's been a minute since I did a video update, and as you can see here, if you're watching my videos on a regular basis, there has been a change in the portfolio. It reflects 2649. The video is recorded in real time, so the numbers may change as I'm actually recording. The video is recorded on Friday, July 29, 2022, and it reflects the market activities and conditions in that time. And in that week, you had the Fed interest rate meeting Wednesday. You also had some key earnings coming out from the likes of Apple, Amazon, Microsoft, Coca-Cola, and many other companies as well. And the fear of recession, is it a bear market? And many other factors are kicking in, whether it's a rise in coronavirus cases and the war in Ukraine, Russia. So it's many factors factoring in. But let's go ahead and move forward here so I can explain what is going on here. As you can see in the portfolio, the current cash investment is 2605. That's a 44-cent gain at the moment. The full share price is, let's get back in here and figure out what's going on here. All right, let's try it again. Again, the current cash value is 2605. That's 44-cent gain. As we try to scroll down, the share price is 63.75. All right. The reason now, if you watch my last video, I had a lot of other positions: Procter & Gamble, McDonald's, Nike, Ralph Lauren, Hanes brand, Goodyear, Krispy Kremes, many other positions. All right. The mindset going forward now is I want to focus on one stock. I want to build this Coca-Cola position out a little bit more, especially since I know the next ex-dividend date is September the 15th. So between this actual video recording on July 29th up until September the 14th of 2022, is going to see me putting most of the cash towards Coca-Cola to build my position out to take advantage of that dividend that's coming up. So that's going to be my mindset to build the crown jewel that is in the portfolio here. The stocks that I got rid of, I wanted to reset. If we're going into a bear market, a recession, I'm pretty sure we're going to have a few days in August where the market is going to sell off significantly, where you have those 1,000-point Dow sell-off days. The NASDAQ climb my way up to about 500 points and so on and so forth. So I'm anticipating those days, and I want to get rid of the positions that I'm just fractionally shared in and take advantage of that sell-off and get back in at a cheaper rate. So with all that said, these are some of the stocks that I do like. I do like Caterpillar. I do like John Deere. I'm not a fan of Apple or Tesla, so I see other people do their videos on here and they have Apple and Tesla. I mean, congratulations to them. They did beat earnings as I speak of Apple, but I'm just personally not a fan. It's not for me. I do like UPS, Smile the Red Club, Ford Motors, I got an eye on. I do like Papa John's. The pandemic has showed that pizza is a winner. I'm looking forward to that Little Caesars IPO if they become a publicly traded company. I would definitely be getting in that. But I do have my eye on Papa John's. I do like eBay as well. Zevia is a beverage company, which I would think one of these companies will pick them off. You have Southern, Bank of America, Wells Fargo. I do like Genuine Parts as an automotive part company because you got Advanced Auto Parts and O'Reilly's and AutoZone. but Genuine Parts is paying the best dividend at the cheapest price right now. Believe it or not. Ferrari, Toyota Motors, Waste Connection. I like Waste Connection. I'm more of a fan of Waste Management. Of course, I like Six Flags Entertainment. So you got Regions Financial, Verizon, BitLots. Of course, I like Nike. No doubt, Microsoft, 1-800 Flowers. Of course, Goodyear Tire and Rubber. I can't say nothing about that. I'm just waiting for it to wait. I'm just waiting for that market. Uh, most people probably say, "Are you trying to time the market?" Not really. I'm just really just anticipating. I'm anticipating the market selling off in the month of August on a few days. And if it does, and these stocks go below a certain price range, and I just get back in and buy the full share at a much cheaper price than what it is now, $12.13. I'm pretty sure it's going to go down a little cheaper than that. So I can just be patient and not go against that. It's just patience pays off. Same with AT&T. Coca-Cola Europe Pacific Partners is definitely a stock I want to get in. I do not want to get in at 54.09. No, thank you. I will wait till it go down in the mid 40s and then hop back in. Again, I just be very patient. You got to be patient in this market. Of course, I like Waste Management, Delta Airlines, Carrier, which is the iconic HVAC AC unit manufacturer. Of course, you need ACs. You may need AC in Great Britain in the year 2022. But AC and heating is a must, whether you're in a residential or commercial building office setting. Texas Instruments, Domino's Pizza. Of course, I like expensive, highly valued Domino's Pizza. But again, I do like Walmart, Campbell's, H&R Block. Yes, and I do like Albertsons and Kroger. Both of those are supermarkets. Realty Income is a good one if you can get it at a cheaper discount price than what it is. Flower Foods, yes. So these are stocks that I want to definitely get back in. Of course, I need my Levi Strauss back in this portfolio. Disney, Altria, British American Tobacco. I like Krispy Kremes, no doubt. McDonald's, yes. Western Union, yes. I did mention Kroger, Ralph Lauren, however you want to pronounce it, needs to be back in the portfolio. Same with Dole. I do like Wingstop. Wingstop did beat their earnings. So again, burgers with McDonald's, wings with Wingstop, and then pizza with Papa John's and Domino's. I mean, you can't go wrong. People love food, and wings, pizza, and burgers and fries sell. Let's move right along. Guess, yes, needs to be back in the portfolio. I got my eye on Nokia, not a fan of Starbucks. Wendy's, I missed that opportunity. Wendy's went down to 15.85 and it's trading at 20.21 and some change at the time of the video now. And so that's just a missed opportunity. Yeah, 21.02. It went down to $15.85 and has climbed all the way back up. This is what I'm talking about. When the market, when it goes down, it creates an opportunity. Take advantage of the opportunity and ride that wave back up. I did not take my own advice in Wendy's. That's why I'm doing it now. I'm taking my own advice, getting out of these stocks, wait till they get clobbered and smacked around, disrespected, and then put my money back in and ride that wave back up. I do like Colgate Palmolive. I do like Dell, since they're paying a dividend now all of a sudden, but it's appreciated. I do like Electronic Arts. They also pay a dividend as well. Johnny in the video game world. Uber Technologies, yes. Noel Brands, yes. ADT, I do like, and Google seems to like them as well with the significant stake they put in there. Alphabet. Of course, I like Mattel going into the holiday season. I also like Macy's with their Toys R Us collaboration. I do like Nvidia, Signet Jewelers. I got my eye on Signet Jewelers. I do. Hasbro. Just wait till them to get smacked around. They have already got smacked around here. This stock was trading at $100. And here it is in the middle of July of 2022 at 78.70. That's a significant drop. And this is what I'm talking about. And it still has some time to drop before we get right into the middle of holiday shopping season. Hanes brand will be back in the portfolio. Again, they're down. They're trading at 11.11. It can easily go back down to that $9 point where it was. And that's why I'll be looking to get back in and not only buy just one share, multiple shares at that $9 or $8 price target that I'm looking for. So just have to be patient. You have to be patient. I know it's trying to time the market, which I'm not trying to do really. I just want to enter the position at a better price point and really buy the full share, not fractional shares. That's what I'm trying to get away from. Fractional pieces of shares on stocks that are, like a John Deere that has significant came down. But for penny stocks, you need to go ahead and just take those out and buy full shares of. So DraftKings is what I'm looking at, and many other little small companies like a Nikola, which has came down, but they trying to turn things around slowly but surely. Procter and Gamble is getting smacked today. They're down to 100 and okay, let's let this load up in real time here. $138.80. So that's why I got out of that position in time before that smack happened. And even Intel is getting smacked around today, just totally disrespected at $35.51. So I'm just waiting for that real, because this is not a real market sell-off. But in the middle of August, when we get there, it's going to be a major sell-off, I'm pretty sure. And I will be getting back into my positions like British American Tobacco and many of these other companies that I did have, because they're good quality companies. I'm just trying to reset my portfolio and take advantage of the penny stocks and buy full shares. And then I can fractionally get my way into bigger stocks that has significantly come down, like a Microsoft, which was trading at almost 300 plus, and now it's well under 3 at the time of this video. And so that's the mindset in this particular video. I'm not in a panic mode. I'm not really trying to get out of the market and none of that. It's just I want to take advantage of Coca-Cola. I want to get in this company and build my position back up. Just like with Bill Gates, who owns Coca-Cola, a different version of Coke that he owns, and Warren Buffett, who famously owns Coca-Cola as well. I mean, it's a great company. It's a sound company. It's a global company. You can own different parts of them, whether it's the company itself or the different bottlers around the globe. And it's uniquely positioned. I mean, you cannot go nowhere and not buy a Coca-Cola. Whether it's a gas station, convenience store, a discount chain like a Family Dollar, Dollar Tree, Dollar General, Big Lots, Coca-Cola, Publix, Kroger, Albertsons, Coca-Cola. You go to your baseball, football, basketball, soccer, golf, hockey, NASCAR, Coca-Cola is there. So it's uniquely positioned. You go to a movie theater, you got your popcorn, you got your nachos, you got Coca-Cola. And so that's why I'm here. I'm here for that. And if Coca-Cola can buy the Red Bull energy drink, which would be a far-fetched, but it would be a welcome acquisition. And that would be even more appreciated, because Coca-Cola do need that energy drink, and that would be the crown jewel. None other than Red Bull. Sure, they do have a stake in Monster Beverage, but Monster Beverage is not Red Bull. All right. So that would be the biggest acquisition for Coca-Cola if they can somehow acquire Red Bull. But again, this is just my sentiments on Coca-Cola. This is my stance. I do give a shout out to Warren Buffett and Bill Gates and many others for their knowledge in the game. It's not about how many stocks you have. It's about the quality of the stocks and what you want the stocks to do for you. And so that's what I'm here for. All right. But again, that's my position. I will be building out the Coca-Cola portfolio in the next few months. and doing videos on that. But you are watching the Stock Eye, a clear vision towards portfolio wealth. I appreciate you watching this video. Stay tuned for future video updates.